Hey everyone, in this video I want to bring you one dividend stock that's down 47% off its high that I think is an excellent buy heading into 2024. Now this isn't going to be a fast growing stock that's going to double your money overnight. Still, I think it's a good investment for passive income investors to consider for the new year. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the stock that I'm talking about here is eBay. eBay is down 46.64% off its high, and I think it makes an attractive investment for passive income investors. Now, I know the dividend yield is not exciting at 2.32%, but consider that eBay only started paying a dividend in 2019, and the dividend yield has increased consistently. I'm going to show you how the company's profit generating potential is good news for investors looking at passive income. The company runs an asset-light business model, just bringing together buyers and sellers, and takes a transaction fee for every transaction that happens on the platform. The company doesn't need to reinvest a lot of that cash back into the business, and so that frees up a lot of cash that the company can pay out in dividends. And so over the next decade, I wouldn't be surprised if eBay's dividend yield grows meaningfully in that time. Now, the big story with eBay recently has been the declines in gross merchandise volume. That's the total value of transactions on the platform. And that's an important number because that's a base where the company takes its percentage fee from. And the more that's growing, the more is available for eBay to take its fees from. That's been declining. But the good news is that in the most recent quarter, it was flat. So you could see one, two, three, four, 5 straight quarters of declines, and what you want to see here is the negative 14%, negative 5%, negative 6%, negative 2, negative 1%, and flat in the most recent quarter. So it could be that it hits an inflection point and turns positive again heading into 2024. The bigger reasons for these declines in 2022 was the economic reopening. Of course, eBay benefited when people were shopping from home more often, being an online e-commerce platform. And so when economies reopened, eBay's business was hurt. Also, eBay's management has focused on more profitable customers, offering fewer incentives, and that's brought down the total spending on the platform. But the spending that is happening on the platform is more profitable. One example is a $15 off a $75 purchase coupon or rebate that eBay used to send out frequently. I used to get those all the time. I haven't gotten one of those in years. And so I haven't really spent any money on eBay because I used to count on that coupon and I used to use it to buy books. All these books on the shelf here, I used to buy on eBay, and you would get a $15 off $75 total purchase. I would just add books to my cart and wait for that coupon to arrive. Whenever I would get it, I would make the purchase. And since I stopped getting that coupon, I found a new place to buy books from. And so eBay hasn't been a choice for me. But, I'm not a profitable customer for very many companies. So I'm not mad at eBay for that move. I think it was a prudent move. I think it's done well for the business. Unfortunately, some customers that are not frequent spenders or high value spenders have been excluded from their priority. And I like that move from management. Also, what eBay has done is increase its transaction take rate. So what I want you to pay attention to now is this line going across the blue bars here. This is eBay's transaction take rate. This is the percentage that eBay has been taking from all of the transactions on the platform, and this has been steadily rising from 13.1% in Q2 2022 to 13.9% in Q3 2023. And if I was to go back even further in this chart, let's say I took you back to 2019, this transaction take rate was around 9%. So it's increased this transaction take rate meaningfully over the years, charging sellers more for each transaction. Of course, sellers are annoyed because they have to pay more, but eBay has taken in more and sellers have few places to look to because competition has done the same thing. I know I've shown you videos with Etsy, and you could have seen Etsy's transaction take rate. Etsy's transaction take rate is around 20%, so it's even much higher than eBay. Amazon has increased fees on sellers. Shopify has increased fees for sellers. So industry-wide fees are going up, and that's been good for companies like eBay, Etsy, Amazon, and Shopify. It's not been good news for sellers because now they're having to pay more and they don't have an alternative because everyone is raising fees. But it's been good news for investors. These are the type of industries I like to invest in when the competition is unanimously increasing fees, increasing prices, and not competing against each other on price. That's what I like to see, and that's partly why I've been recommending eBay stock for nearly all of 2023. And one last thing I'm going to show you on eBay's latest quarterly update is the advertising revenue. This is another catalyst that I really like with companies like eBay that have hundreds, over 100 million active members, active buyers. And this is a base where eBay can show advertising to. And of course, merchants are interested in showing advertisements to people that are on the platform ready to buy something. And so they're ready to spend, and marketers are interested in showing advertisements to these individuals. This is arguably more valuable than showing an advertisement to somebody that's watching a basketball game because they're not ready to spend any money at that moment. They're just watching a basketball game. But if you show an advertisement to somebody on the eBay platform, that could convert into a sale relatively quickly. And so its ad business has grown nicely from 275 million in Q2 2022 to 366 million in Q3 2023. And this has been a theme with many e-commerce sites, Amazon especially. Ad revenue is exploding higher because marketers are more and more interested in showing ads to people that are about to spend money. And this is a catalyst I like with eBay. Longer term, eBay has done a good job growing its revenue, 10.06 billion in the latest trailing 12 month, up from about 8 billion in trailing 12-month revenue. You can see big fluctuations here, and eBay has also done a good job with its acquisitions and divestitures. It'll buy businesses and sell businesses, and it's done a good job generating profit from those transactions. It hasn't made that many imprudent investments, and it's done a good job allocating capital. That free cash flow the business generates, it's done a good job of allocating that cash flow. And I showed you earlier that I talked about earlier how the company has an asset-light business model that's allowed it to generate robust cash flow from operations to sales, 29.7% in the most recent trailing 12-month period. I wouldn't be surprised if this number continues to move higher going forward. The company takes that transaction fee, and it doesn't need to reinvest all that much into the business. It needs to invest in the technology to make sure that it's safe, keeping buyers and sellers honest with each other and holding them accountable, increasing security on the platform, making it easier to sell items on the platform. Those are not expensive compared to some of the investments you would need to make if you were running a business where you own the inventory, like all the logistics and shipping and handling and things like that, which eBay doesn't invest in. It lets buyers and sellers deal with shipping and handling, and that's let off a lot of cash flow for investors. And the operating profit margin, a similar story, 20.84%. Of course, I mentioned already that the company benefited when people were shopping online more often. And so the pandemic was a boom for the business, with operating profit margin jumping upwards of 30%. That's not a long run sustainable rate. That was just for the pandemic because of the unique circumstances. This operating profit margin above 20% is more realistic. Between 20 and 24% going forward is a more sustainable operating profit margin for eBay. And considering the easing of competition industry wide, I wouldn't be surprised if this is on the higher end going forward. And looking at eBay's balance sheet, it's a relatively decent balance sheet with $8.6 billion in cash and short-term investments and $7.7 billion in long-term debt. It has almost $1 billion more cash than it does long-term debt. And considering the company generates strong cash flow from operations, strong profitability, this long-term debt is not a problem. It can, in fact, borrow more opportunistically if it needs to. And finally, the last reason why I'm going to say eBay is an excellent stock to buy for 2024 is the cheap valuation. eBay is trading at a forward price to earnings ratio of 9.728, a very cheap valuation to be sure. It's about half the average valuation of the S&P 500, which is trading at roughly 16 to 20 forward PE. eBay is at 9.7, so about half that price. Now, there is a reason for the cheap valuation. You're not going to get very much growth from eBay. eBay's not going to grow revenue at double digits. That's not what the company is built for, but the company is going to generate strong profitability, and it's going to find catalysts to increase profitability further, like increasing that transaction take rate, like incorporating more advertising revenue, and thereby making each incremental transaction more profitable. And so in those ways, it's going to generate profit. It's going to give off a lot of cash flow, and those cash flows can turn into growing dividends longer term. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.